What's going on, Ape Nation? Welcome back to the channel. Let's go, baby. AMC was up 2% today. Might not seem like a big deal to the average person, but if you know the catalyst that is happening tomorrow, which is the CPI data, that is the measure of inflation that is coming out at 8:30 in the morning, it's actually a pretty big deal that AMC was even positive today, because the first thing that gets sold off when investors fear high inflation is high growth stocks, recovery trades, stocks that are seeing 500% rebounds in their growth rates, like we are seeing with AMC. So we were positive. That's a good thing. Will tomorrow be positive? That's what I want to go over here in this video. What the expectations are for CPI tomorrow. What the news was for the day on the scope of oil, the ceasefire over in Ukraine, Blackrock, which is taking massive losses, as well as the Batman box office numbers. So let's get into it. I am not trying to waste your time here on this channel. That is not what I like to do, and hopefully you guys do find value out of this video. And if you do, hit the like button and subscribe to the channel to stay up to date with everything that is going on in the markets or with AMC. I will also go over another possible big trade, like the last BP trade that was up well over 100%. I want to bring that to you guys free 99. I think there is opportunity, but it is not a financial recommendation. Hear the thought process out and then come to your own conclusions. It could totally be worthless, or it could make a lot of money. It goes either way. So let me throw that disclaimer out there. And if you guys want access to all of my trades, not just one trade, hit the link down below in the pinned comment to get access to that. Get yourself free stocks as well, link down below in the description. All of that helps support the channel and make all of this information possible for free 99. So first things first, like I said, AMC was up about 2.08%. It was a good day. And after hours, down about 0.19%, which, you know, is not a great day. It's not like a crazy day, because the markets were up. The NASDAQ about 3.59%, Russell 2000 up 2.71%. So it's kind of in line with that. And we were up a lot more at one point. At one point, we were up almost 7% at $16.26 per share. And then once we hit about 3 o'clock, give or take roughly, we started to kind of consistently sell off. It wasn't huge candles, but we just continued to slip. So I think that was a lot of people, especially the institutions, that were essentially selling the stock short, little bit at a time. And why would they do that? That is because the CPI data is going to come in high. The actual expectation is for 7.8% year over year and month over month. So that's basically, it's not going to come in at 7.5% month over month. It's going to be a smaller number, and then times that by 12, and that's where you get the 7.8%. So when there's high inflation, what do people do? They usually flood into commodities. They usually short stocks, and they definitely sell stocks that are higher growth companies. Now, it's very interesting to see such a strong move heading into CPI. That does indicate to me that we are likely to see a sell-off, as people are kind of underestimating the CPI power that will be behind that. Fed, if CPI comes in at, let's say, 7.5 or 8 or 9%, they're gonna have a big weight on their back to do something to jack rates up, possibly faster. They could throw us a curveball, and that's what markets will be kind of concerned about, and exactly how much of this commodity move will be factored into this CPI report. Like, let's say, for imaginary purposes here, we get an 8.5% CPI reading, but that reading didn't even capture all of the commodities that have been going crazy, like nickel up crazy high amounts from $20,000 to $100,000, completely halted. First time in history that has ever happened. Wheat up over 100%, corn up over 100% in the past year, up over 30% in the past month. You also have oil that is up dramatically. You have basically everything is up substantially. And, the food sector as well as the oil sector, the energy sector, are the largest sectors of CPI. So if you get a super high reading and it's not even capturing a lot of the commodity moves that we are seeing now, say it's 8.5%, then markets might just freak out, expecting the next one to be that much worse. And this move today really does give us a lot of cushion for a potential move. Like technically, right, to break even on this move today and a move down tomorrow, you would have to see the markets down an equivalent amount. You'd have to see the NASDAQ down 3.59% to just break even on the last 2 days, to essentially have done nothing today in the past 2 days. So I do think there will be a down day, but I don't really think it's going to be this severe. I don't really see a 3.5% move down on the NASDAQ, 2.5% down on the S&P, or 2% down on the Dow. I simply don't see that happening, but the VIX was only down about 7.63%, and typically if the markets were reacting on a solid bounce like it looks like today, which it's not a solid bounce, nothing has really changed, you would see the VIX down 15-20%, but it's not acting in that same way, and you're still over 30, and that is indicating a lot of fear is still in the markets. I think a lot of this move was shorts actually covering and a lot of retail investors flowing money into the markets. Over the past 2-3 months, this has been the largest inflow of retail money ever in the history of the stock market. Billions and billions and billions of dollars, whereas hedge funds have been net sellers of stocks, and they have not brought pretty much any new money into the markets comparatively to what has been taken out. And you can see right here, oh, quick link, at 10% this year. That's a scary number, because you might have to pull Volcker's. That means typically, like what we've seen in the 70s, if inflation's 15%, you have to bring the interest rate up higher than 15%. So that's looking at a very bad situation there, and hopefully that does not happen. But nonetheless, that's really what happened today. As far as why the markets are actually rallying like this, it is because Russia announces new ceasefire in Ukraine, and it is for the cities of Chernihiv, Sumy, Mariupol, Kyiv, and Kharkiv. However, the safe corridor allowing people to leave was open in Sumy on Tuesday. So it's basically a 12-hour ceasefire from 9 a.m. until 9 p.m. to allow safe passage through 6 corridors. But it looks like there was some shelling too, so it's kind of these false ceasefire agreements where they just go ahead and kill civilians anyways. Nonetheless, investors took it very bullishly, and you did see Zelensky today actually saying the aim of talks is to end war. Both sides must compromise. And he says again, Ukraine, Zelensky says prepared for certain compromises. So who knows what those compromises are going to be, but the markets are definitely taking this as a bullish thing today. But I don't think Russia really can afford to compromise, because by outside perspectives here, they are losing the war, and their economy is shut down. I mean, you can't even go get a Big Mac in Russia. Imagine that. They finally got McDonald's in the late 80s. After the Soviet Union had blocked it for like 20 or 30 years, finally got McDonald's. It sticks around for 30 years. Everybody likes McDonald's, just as one example here. And it just got yanked away. Like Little Caesars, Pizza Hut, KFC, Taco Bell, everything has gotten taken away from the Russian people. They're not very happy. So I think from Putin's side of this, you kind of have to get some kind of major victory here in Ukraine to offset that, but that's really not happening. So odds are the situation will only get worse, and you will see more just bombing across the board. Russia, they're probably looking at this as a way to say, hey, we let everybody get out that wanted to get out, and they took the risk of staying, and it's war essentially. So I don't really think a 12-hour ceasefire justifies a 3.5% move to the upside for the NASDAQ. But what is exactly going on with oil as well? This is the biggest drop we have seen ever, besides the day that oil went negative in 2020, negative about $40 per barrel. Oil was down about 10%, Brent crude down 11.69%. Unfortunately, it's probably not the end of that, but it says OPEC will aim to make market balance. OPEC Plus will discuss supply decision at next meeting. And the OPEC meeting is not for a little while here. And nobody's really in a rush to bring down the price of oil in a substantial way. No, why would you do that? If you're pumping out the same amount as you were and you're making much more than you were, why would you all flood the markets with oil and bring down the price of oil so much so you're giving away more product for less money? Doesn't make sense. And I highly doubt you're going to see anything that will substantially move the oil markets. I think that you're just in this weird state where you're going to see a lot of volatility. You're going to see up and down moves when they're not really justified. So you have to look at everything going on and say, hey, is this really justified? Is a 10% move down today in oil justified? I don't think so myself. It takes a while to see the effects of sanctions, the oil imbalance coming to fruition. And Russia just announced on Monday that they were actually limiting exports out of Russia, but they didn't say what they were limiting. So who knows if it's natural gas, oil, if it's going to be wheat, corn, sunflower oil, or what it is going to be. Nobody really knows. So I think that would have a bigger impact than any of this. And I do think it's that effect where a lot of people crowd into oil trades and for rightfully good reasons. It was only going up. I mean, there's a lot of reasons for it to go up as well. And then once the tide turns, everybody gets out. And that's really where I think the door for opportunity kind of opens up in that regard. But we'll have to wait and see what happens. As far as the Blackrock situation, the Blackrock Emerging Frontiers Fund plunged over 10% in February, suffering the worst trading loss since it started more than a decade ago. The fund, which managed $960 million at the end of January, is now down about 7% this year, said the people who asked to not be identified. Russia was one of the biggest long bets for the hedge fund at the start of February, with 9% of its gross assets invested in the country's shares. So they're pretty much taking a total loss on 9% of their portfolio. And this is only one example of what is going on a mass scale when it involves Russia, because Russia was a great place to invest in before all of this happened, right? Very small GDP, so they had a chance to substantially grow their economy like they had been doing over the years if they just did not do this. They also had very low debt to GDP, one of the lowest of any country, and comparatively to their population, which is about 150 million, they had the lowest debt to GDP ratio at about 18%, comparatively to Japan at 236% debt to GDP. So, they were in a very good shape as far as their obligations to finance and to repay their debt was concerned. But let's get into more of actual AMC data right now. So AMC for option activity for the day, it was 56% positive, very small dollar amounts, which does tell me that this rally that we're seeing in AMC and other stocks is not really too justified. The total dollar amount was 1.38 million with 12 orders in total. So not a lot of option activity that is being placed. Some notable dates, like here's April 14th, March 18th, $17 calls by the same people, worth about 150,000 in total. So interesting trades right there. But as far as the short interest of free float, 20.72%. Cost to borrow max pretty much staying the same at 2.32%. Utilization is at 100% and days to cover at 2.58. Current shares that are sold short of 106.69 million. Nothing too crazy coming out right here, but we did get the release date for the settlement date of the short interest, which was February 28th, and the short interest was docked at 19.79%. So shorts, they will never learn their lesson until they are actually squeezed out of their positions. I think that's very obvious here. As far as the max pain, that is $17 by the end of this week. And the Stocko tracker data, like I have said many times, I don't expect anything too crazy for this week, but for next week, that's where things get interesting with about 7,000 calls that are currently in the money, 326,000 calls that are out of the money, 83,000 puts that are in the money, and 57,000 puts that are out of the money. So that's 8.3 million shares that potentially would have to be bought by the market makers on the put side if all of these puts run out of the money. And that's about 32.6 million additional shares that would have to be hedged for by the market makers or bought if AMC stock did see all of these calls run into the money. You know, it probably wouldn't happen. We've never seen that happen. But even if half of them ran into the money, that's still 15 million shares that would have to be bought by the market makers. Considering the low volume that we see on any given day, that would amount to a very substantial move. Now, the box office, I just want to point this out. It says the Batman soars to bedazzling $134 million opening, and the actual global opening was $258 million, which beat both estimates on the domestic as well as the international opening for Batman. So I think it just goes to show again, like we've talked about many times, the success that the box office will see throughout 2022, and we have a lot more blockbusters that are coming to the theaters. So like Adam Aaron said, it's going to be a softer Q1, and then we're really going to start ramping up over the summer and into the fall. So I am definitely that should print some massive tendies. I the year with all of you guys on my that. Now, as far as the actual technical analysis, we closed above $15 per share, which is a really great sign. We were above $16 per share, which was another good sign, but we did get rejected off of that. So we kind of look like we're going back and forth in this $1 range, just bouncing off both these lines when it does come down to it. A lot of support at 15, a lot of resistance around 16, but we will break out above that. If we do see positive CPI data and the markets take it positively, we will break out above that tomorrow. As far as the 20-day simple moving average, that is $17.08, and that's going to be a key level to break out above. And then really, I want to see us get back to 1850. It could happen in one day. One really good day could push us over 1850, and then we can start talking about an actual breakout here. But ever since really early February, so the past month, we've went up, came back down, went up, came back down. It's literally looking like a wave, and we're definitely going to break, in my opinion, to the upside, as we do have such a strong demand zone under 15 and the fundamentals that support that demand zone under 15. As far as the MACD, it's just all messed up. I mean, it's not really indicating a certain way in particular. It looks a little bit on the bearish side, but I can't draw any conclusions based off of that. The RSI is still on the oversold side of things, and like I said, the data does come out, the core CPI month over month, year over year, as well as initial jobless claims, all come out at 8:30 in the morning. So I hope you guys heeded the warnings I've been saying in the last couple of videos, and you finalize all your trades heading into that, because now we just gotta wait and see what does happen. So thank you guys for watching. That is going to be it. Get yourself those free stocks and join the trading community. Link down below in the pinned comment. I will see you guys later on tonight during the live stream, but until then, you guys take care.